Ladies and gentlemen, take your seats as it's time to welcome on stage our next panel, the Web3 Game Changing Challenge. Let's give us a warm welcome to our moderator, Nadja Bester, co-founder at AdLunam, who will introduce her panel.
Hi everybody, lovely to be here today, and I think as we close off today, we're going to close off with a very pertinent topic at the moment. If you hear the terms Web3, blockchain, crypto, all of these things, whether someone is for it or against it, but there's very few opinions that are not opinionated. So as I introduce the panel today, first just to position myself, so I've been in the Web3/blockchain space since 2017, have seen a lot of changes over the years. I'm a founder in the space, I'm an investor, I'm an advisor, host a podcast, so I'm really all over the place, and so are my panelists today. So Udi Algrassi from Coinmama, Lea Wang from Trade Vision Markets, and Jad Jabbour from Cryptoware. Very, very happy to be here with you guys today, and we are going to really just dissect what it means when we talk about Web3, when we talk about the intersection between Web3 and gaming, why that's relevant, and how it intersects with the fintech world. So yeah, happy to be here with you guys today. So to get started, I want to just position us in terms of where everyone comes from. If you want to just get going with your introduction, and then yeah, we get going.
So my name is Udi. I'm in this industry for more than 15 years. From 2016, I'm involved in the cryptocurrency mainly as an advisor, founder, investor, and so on. And that's it.
Hello everyone, my name is Lea Wang, and I'm also a co-founder for some financial service companies. And my background is coming from the financial trading and the fintech sectors. And I'm very glad to be here today together with these Web3 experts. Yes.
My name is Jad. I'm the founder of Cryptoware. We are a software and technology company that specializes in blockchain and Web3. We're based in Beirut, and I'm super happy and super glad to be here on this panel today.
Lovely, so let's get going. So I think the first question, I mean, if you mention the word Web3/crypto/blockchain, depending on who you speak to, you have such different definitions. So I want to start us off, what does Web3 mean to you, Jad?
First of all, let's agree that when we name things, we name them for the ease of, calling them out. And Web3, we use the term Web3 because we are signifying an evolution from a previous version of the internet, which we call Web2. And there's a lot of content on the internet that separates between Web2 and Web3 and what the evolution actually is. But what it actually is that people have now the ability to own their content, to keep it simple, right? Before you posted your content, whichever server your content is on, these people have control over it. So with the Web3 or let's say the new way of looking at the internet, what we're trying to do is give people ownership over their communication, over their content, and over their assets, whether digital or otherwise.
Udi, you want to add?
Yeah, I completely connect to what Jad just said. I think the main difference is for us as people that are coming from the industry is the shift from owning the client data to allowing the client to control his own data and exposure. So if until now a client had to register to the platform, provide all the information, and all the information was held by a central company, now the client can share his information, block the information, and decide where he wants to reveal it and where he wants to block it. So the data is with the client and not with the company again. And this is the major difference that we see between Web 2 and Web 3, from my point of view.
Right, as the two gentlemen already mentioned, that I believe, so Web3 has significantly changed how the way we're interacting with the internet. I think the key factor in Web3 are decentralization and also the user-centric ecosystems. So compared to our current Web2 environment, especially for the financial trading and fintech perspective, I would believe that Web3 has brought mainly or major the transparency, security, and fast execution to our industry as well.
So what I get from each and every one of your answers is if you think about Web3, it's not just about crypto, although that's a very big narrative that we've had for years now. So I want to focus a little bit on gaming, not because we're here to talk about gaming today, but because gaming is one of those use cases that was adopted very early on in Web3. So using the idea of gaming as a foundation, what can we anticipate for fintech going forward? So what principles are there in gaming that has been adopted within the Web3 space that we can learn from in terms of fintech? And whatever your audience is, whatever your industry, whatever your sector, what are some of these principles and learnings that we can carry on with us? Udi.
That's the question. Okay. Okay, so the trend of gamifying financial instrument is an ongoing process for the last 5-10 years. We see that in different aspects, like it started with copy trading and additional things that are coming from the gaming industry. What we see now is a much more advanced and much more quicker adoption of the gamification aspect into the finance. So we can see companies today offering games that are finance related. We see platforms that can support different structures and mechanism of client rewards and affiliate management that are coming completely from the gaming, but provide the same thing for finance industry. So I think this trend is just started, and we're going to see this advancing and advancing as we see more younger people coming into age and becoming more financial investors, and they want to connect to what they know. And they know their PlayStation, they know their other games and stuff, and they want their finance to look the same as the games. It's good for the industry, but it's bad for the regulation. But this is a different discussion.
Yeah, I would love for you to add to that and maybe do focus a little bit on the regulation.
Well, this regarding the gaming side, I may not be the best expert to comment on this. However, regarding the regulations, and I could say this is still related with fintech sector, because on the fintech sector we do have some reg tech nowadays and helping the brokers or other financial institutions on this AML and compliance side. I do believe such technology or infrastructure can be used in Web3 and the gaming side as well.
So, Jad, you are very strongly focused on the technology development side of things. So if we have innovation on one hand, we have the regulators and the regulators, the regulation and the regulators on the opposite end of the spectrum. Then we have the technology positioned in the middle. And the technology is almost like money. It's a concept that's being used for good or evil. It's a neutral idea, but that's being used by both sides. So what are your thoughts in terms of the technology itself and where that is taking us?
So if I may start with the regulatory part first, and that's a very sensitive topic, and there's quite a lot of opinions around it. And the way I see it is that there's a misconception when it comes to governments and central banks as to what the blockchain is. And there's an immediate assumption, especially when blockchain first came to the stage, there was an immediate assumption that it's going to be used for nefarious deeds. But in fact, and that's one thing governments are learning slowly and regulators are learning slowly, is that everything on the blockchain can be audited. So right now, when you register a company or if you're working as a freelancer, you have to go to your relevant ministry or finance or wherever and get a special number that you have to put on your invoice. This is part of regulation and classical fintech, right? And this is not a problem with blockchain. You actually only need to declare your wallet address officially, the same way you declare as a company your bank account. And then with the right tools, any government or regulatory body can be able to trace and track your transactions and make sure that there's no nefarious or bad acting or malicious acting in that term. Now, with that being said, the way it applies to gaming is quite complicated because as someone that's been in the gaming scene for as long as I can remember, in 2004, a game came out that changed everything. It's called World of Warcraft. And when we dove into World of Warcraft, we kind of a lot of us that still play the game to today. So that's 16 more years, right? And so a lot of us had a problem with the way our assets in game are being treated. So suddenly you had all these bots working on the game to try to collect the in-game currency and then sell it for real currency outside the game for other players. And that was a real problem for a lot of games. And you can see that this is where there's regulatory issues, right? Because you cannot trace this digital asset. So you cannot really prove that someone sold it illegally to someone else or otherwise. This also applies to, if you're familiar with the shooter game Counter-Strike. It's very old, also very prominent. There's a lot of players. One of the big aspects of that game was trading the skins for the characters and for the guns. But that's also an asset that exists on a centralized server somewhere. You cannot trace these trades properly, right? It's not open data. So if we're going to discuss about how gaming can benefit from blockchain technology and at the same time be of use to regulators, it is that way. So if you tokenize these assets on chain, then you'd be able to track how they're being used, how they're being sold, and you'd be able to, obviously, pick up on nefarious and malicious activity. So I think there's a lot to gain, whether in the gaming industry or otherwise, from integrating blockchain into classical fintech.
So Vitalik Buterin, the founder of Ethereum, actually founded Ethereum because of World of Warcraft, because he couldn't transfer his assets in the game. So Udi, you have a lot of experience both in the traditional finance industry as well as in crypto. So how are you seeing this confluence of innovation? On the one hand, I mean, people are roaring to go and there's new innovations happening and taking place on a daily basis. And we have these sandbox environments in certain jurisdictions, certain governments that are very pro, or at least rather pro, pushing the boundaries. But then there's a lot of governments that really are doing everything in their power, and financial regulators, of course. So how do you see this playing out? We have almost a disparity between certain regions in the world where there's a lot of innovation, and then in others, especially in the West at the moment, I mean, if you follow the news, the US, the SEC is all over, no, you can't do this, you can't do that. They're even regulating NFTs. So what are your thoughts on this?
First, I would like to start and say that regulation is good. Regulation is there to protect the clients. We are not against regulation, and if something was said in that direction, this is misunderstanding. So we want regulation. We want some rules for the game. We want to protect the end client against fraud, against malicious actions, and so on. So when we think about the regulators and the technology develops a lot faster than the regulation. The regulations takes time. So we saw that in different cycles in the industry in the last 20 years, where new innovation came, and then a year, 2 years, 3 years later, the regulation came into effect in order to control the market and to protect the clients, which is the end goal. So I don't see regulation as a bad thing. What I see now, I see the regulators fighting with something they don't understand. They are trying to regulate something that they don't really control, they don't really understand until the end, and they don't even know how to regulate it. So we see some regions, some areas where there is some kind of initial regulation or basic regulation, or some countries are trying to regulate the NFTs, some are trying to do that and this, but there's no like a complete, clear guideline regarding that. On top of that, we have to remember that the regulators push us to Web3. When they did the PSD2 and they did the GDPR and they did all this stuff to support the client and to allow them to control their data, they pushed the industry into Web3. So I know that, I don't know if some of you are brokers or so on, but onboarding a client now and onboarding a client 10 years ago was a completely different process. Now the client needs to provide documents and this and that and POS. You go deep into, to his pocket and you see everything. And not all the clients wants to do that if they want to trade for $1,000 or $2,000. So on one hand, the regulators are trying to catch up to the technology, but on the other hand, the technology is developing much, much quicker, and the demand that is coming from the public for ease of onboarding, ease of trading, quickly, decentralized, transparent activities is pushing the technology forward. I hope that the regulators will catch up in the upcoming years, but we will see.
Lea, you are very active in the Asia-Pacific market. What have you seen in these markets that might distinguish those markets from markets in the West when it comes to the innovation of new technologies as well as the regulation thereof?
Mm-hmm. Actually, in Asia, especially, for example, nowadays, China, Japan, and Korea, they have a very mature and long history on the digital financing or the digital trading and the gaming actually together. So there are a lot of generations or the big part of the populations that are very familiar with it. They are dealing it with such digital things like on a daily basis. For example, back in China, maybe Udi would know that we don't use cash anymore. Everything is digital. And few years ago in China, they also launched the digital RMB. It's not like you just pay online with a digital wallet or etc., but it's actually having the same value as the real paper notes. So I would say in Asia countries, they are quite advanced in such technology innovations, and people accept that. However, the regulation, I would say they are still experimenting and testing water. Well, coming back to this anti-money laundering and to make it traceable, etc., it's still a challenge there. Yeah.
Jad, so you mentioned earlier the anonymity of someone who perhaps only wants to be known by their wallet address. How does this fit into a society where companies and governments know more about us today than they've ever known before?
Actually, that's because of it. So because of that problem, and as Udi said, it's they pushed us to Web3 because they have all our data. They do whatever they want with it. They sell it to whomever they want. The banks, they have a hold of your money. They can do whatever they want with it, and to actually sign off on that, people don't even know that. And it's so I think mainly you can create a trace of history for a specific entity without naming it, without identifying it, and that was part of why they came up with the standard for soulbound tokens. So the point here is that if you have a token in your wallet that represents some kind of activity that you were part of, or some kind of certification that you received, or whatever, as long as it's a soul-bound token, that means it's an NFT that you cannot transfer out of your wallet, right? This creates eventually for your wallet a history of activity. And then whatever KYC or AML that needs to be applied, it will be applied to whatever history your wallet has, plus whatever transactions that your wallet has engaged in. And as Lea said, they're finding a lot of trouble, the regulators, with tracing that, even though it's all programmatic. They can write the proper tools to pick out that. So we already have a lot of AI models that take traditional financial data and then they pick out certain AML specific behaviors or fraud detection and all of that. You can basically apply the same model to the same data you get out of the blockchain. You get the data from the blockchain, you normalize it to the same format you had before, and you apply the same model. It's not that I want to say difficult, but it's more than that. It's easy, right? But they don't want to, and they don't want to because they understand that they can't fully control this. And this is, I guess, where the issue lies. This is why the SEC is running after all these companies. That's why you've got the MiCA regulation in Europe, and that's good. As Udi said as well, we welcome regulation as long as the regulatory behavior is well weighted.
So, Udi, or maybe just quickly for those in the audience who are not familiar with the term NFTs, stands for non-fungible token or digital assets, digital collectibles. Again, we can have a whole panel just talking about this because the definitions vary greatly. So, Udi, Jad mentioned now about AI. And we've seen over the last, let's say, for most of this year, the proliferation of AI, generative AI with ChatGPT and everything that came after it, which is, everything has basically been built on top of it. So why have we seen this explosion in adoption in AI, and we are not seeing the same thing in Web3?
I'm not that expert on AI, but I have some basic experience as a user. I can say that AI is very intuitive and easy to understand and to use. So I don't need to spend time on training, on education, and so on. Web3, most of the people are still living in this ethos mythos of like it's a fraudist business, blockchain is completely money laundering facilities and so on. So some people it's a little bit difficult for them mentally to connect to that. Second, the technology is not there yet. We see it's a little bit complicated to open a wallet, to send money, to get it back. It's not intuitive as paying with cash or paying with credit card. We're all used to it. I think it's a process. It will take us a few years, but in the end, the goal is positive because we will control our data. We will be on top of this. We can either make money from that, share it with our friends, and do whatever we want, but it's our data. It's not Facebook. It's not Google. They make a lot of money from our data. And I think the end process will be that each one of us will control the amount of exposure he would like to get, and later on will be rewarded for that data.
I saw an ad this morning from MasterCard back when they launched the credit card, and it was someone going to a Burger King and trying to pay with a credit card, and then the people around them said, well, why on earth would I pay for a $3 whatever burger with a credit card? And if we fast forward to today, as you said, in some countries, you don't use cash at all anymore. So yeah, please add to this. And then I also want to know from you in terms of the technology, because Udi said the technology is just not there yet. Why is that?
So this is exactly what I wanted to talk about, segueing from the AI subject. So he's 100% right. So the technology when it comes to Web3 and blockchain is still not mature enough. And the example that we can draw here from AI is the fact that GPT 3.5 was available 5-6 years ago. People only found out about it in January because they released the chat tool, which made it more accessible for people, right? So if we're going to talk about other AIs, like Stable Diffusion, which is a generative for images, right, or for videos, this is the case now. So right now, Stable Diffusion is going through a transformation where these technological tools are becoming easier and easier to use for everyone. And to get to that point in Web3, we need to bring the technology up to that level. Right now, to like install a wallet, you have to go through some steps. Save the key phrase, and I know it's all for security. But that doesn't mean it makes it easier for the user. So when Udi said that the technology is not there yet, he's 100% right, it's not there yet. But as a technologist in the field, and my other venture called Arcam specializes in AI as well, we're building a Stable Diffusion pipeline. And I can tell you, facing the same problem with Stable Diffusion, it's pretty hard to tell people that this is something that you can actually use beneficially. And that's a problem they currently see in Web3 and blockchain. They think it's just went through a trend. Whereas in fact, if you remember in 2010 or 2011, there was also kind of an uptick when it comes to AI because suddenly we all found out that Amazon's recommendation engine, Facebook's recommendation engine, Instagram's recommendation engine, they all rely on models, right? Once we learned that, there was a bit of a hype around AI, but because people didn't have access to interacting with models, it didn't pick up as much as it picked up this year.
Lea, you mentioned earlier that in countries like China, people have been using digital concepts when it comes to money and gaming and all of these different sectors for a long time. So the education has been leading into where we are today. So how do you think, what are we going to have to do to get the rest of the world to go through this, let's say, this user journey of education, of understanding, of awareness, of adoption? What is needed that's not there right now that you are seeing in your everyday life and in your profession?
Not sure if there are any brokers here today, but I think one good option is could combine this education to some like a gamified like format to do it, because imagine the traditional learning or education either on crypto or even on trading. People may think, okay, it's somebody from Wall Street who has experience on the investment, etc. Can do. However, it doesn't have to be like that, especially nowadays. For the younger generations, they can totally do that. But how? We need to combine this with some entertainment and a motivative way for them to get involved. But then, like this, how exactly to do that? This may brought back to this Web3 gaming concept. I think what are the three key factors for the Web3 gaming? One is the tokenization of the in-game assets, right? Another could be the earning, play and earn, right? You play and earn, you learn and earn, and even you log in to your account and you can learn, you can earn. Or the third one is to what's the third one again? Well, but yeah, let's focus on this two first. So these can totally be brought to our like education or even the trading industry, because as far as I know, there are already like brokers nowadays trying to introduce such like a gamified concept to their daily trading and education to their audiences. In this case, for example, you launch a trading competition instead of like the real like a buy and sell, which is really boring for most of the people. But you can actually launch some tasks, and the people can like get over of each task, and then they can earn some sort of like a platform token, and they can actually use such kind of token to place their trade, to buy and sell any instrument, or they can use these tokens to trade the real fiat, and then they can withdraw. So these, coming back to this learning and education part, if we launch these, for example, learn how to trade, learn what is CFD, learn what is Web3, and then you can gain like 10 USDT. I think a lot of like players in the industry already started to do that. As far as I know, there's Binance, there's even Revolut. They already launched such things. I believe this is a good portal for the different sectors to start.
Udi, so you have experience merging trading and Web3. Please tell us more about this, and please add to Lea's thoughts about how we can get the masses to adopt a new mindset.
I think the incentive needs to be that profit, like anything else. So once we, as a financial industry community or brokers or whatever, will understand that we can still make the same profit without using the existing tools that we have and using new and advanced tools. For example, in order to bypass liquidity, we can use DAO pools, which will provide the same liquidity and with additional profit for the client. Instead of onboarding clients, we can allow them to connect with Web3. So there's a lot of technology and solutions that are coming into this space, and slowly, gradually, we'll push back what we know today, and we will go into something new, which a broker will be like a community. It will be like a place where you share your knowledge and experience with other traders, rather than a place where you are trading against the house, trading against somebody, where somebody is providing the liquidity and making money when you lose. So I think the whole industry in the next 10 or 20 years will shift into something more social-oriented, very transparent, very easy to onboard, very easy to trade, gamified style like we discussed in the beginning. But I think for me, this is the direction. I see decentralized operation, financial operation, that will come from communities, not from a broker, not a brand name of a broker, but rather a community, the Cypriot traders or whatever region or whatever community we like to use. So this is what I see as the future of this.
Right. Right. This actually, the nature of the social actually inspired me about the missing third part. It's about the user-generated content, the UGC. Yeah. Because of this social nature, it kind of engage anybody who participates in these sectors that to like be more proactive and feel like to involve more, because what does it mean, the user-generated content? It means the people who ever involved in this game or the trading environment, you can actually create your own content and then sell it or exchange to otherbody. So on top of, if we're talking about the financial trading, then on top of the daily buy and sell on instruments where you can make the profit, you can also actually create your own things and generate other profit stream.
Just to summarize and going back to what Jad just talked about, I think accessibility and daily use, this is the key for adoption. And Lee was talking about China. In China, there was a situation where people had cash and they had mobile phones. There was no laptop period or PC period where everybody went through going through the PC, laptop, and then mobile. They went directly from cash to using a mobile. And when everybody was accepting the WeChat money and this stuff, this pushed the government to create their own currency, which is a digital currency, because they wanted to control it. So this is the process. We see that process, the same process going in Africa in some countries where people don't have a previous knowledge in PCs or stuff. They got the mobile, they get paid through the mobile, they do the transfers through the mobile. So for them, this is natural. But in the West, where we grow up with all the stages, we started with the PC and all of this, so it's still a little bit difficult for us to adapt it. But accessibility, education, and the ease of use, this is the three things that will lead us to much expanded adoption of the technology.
So I should have started the introduction to the panel today with a warning, because I think there's very few people in this room, unless you are already working in the Web3 industry, who didn't hear a term today that you might not be familiar with. And that definitely is one of the problems when it comes to, just everything that we've been talking about. So we have so many acronyms, we have so many different concepts and ideas. For the average person who might want to understand more of what is being spoken about, even if it's just in terms of awareness, but then the next step, taking a step into this world, what do you recommend and really where to start?
That's a tough question. It's very common for when a new technology comes out or a new way of doing things, for there to be peripheral tools for people to navigate that new technology. But when the technology is still in its infant phase, these tools are very scarce. So one, I think, person interested, right, should start. Let's start with the person's interested, and then we'll move on to everyone else. So the person interested, where they need to start is they need to understand in very simple terms what the blockchain is. It's just a statement of accounts. And every time you need to add a row to that statement of accounts, it needs to go through a process. So, and that statement of account basically is the same with all currencies, except with government currencies, that statement of account exists one place at the central bank. Right? So it's exactly the same. You take that statement of account, you distribute it across the network, and then you have a decentralized currency. That's for one. If we want to talk about these tokens and all of that, this is where it starts. If we want to talk about the acronyms, like the NFT, the non-fungible token, and I don't think we should keep on calling it that. That's a very technical name, right? Right now, when you buy a house, they give you a deed, right? That deed is issued by the authority responsible of issuing that deed in the specific country, right? That deed is the NFT. It is the proof that you own this house. And this is what the NFT is. It's the proof that you own a specific asset, be it digital or otherwise. So I think if we start with simplifying things and not making them... So a lot of why people migrated from traditional fintech to Web3 is because the big guys in traditional fintech has made the game so convoluted that it's so hard to understand where to even begin if you want to get into finance. The thing about blockchain is that it's not supposed to do that. It's supposed to simplify things, but it's on us technologists. It's our fault because we think everyone's an engineer, but everyone's not, obviously. So the next step would be, in my opinion, is to stop using the acronyms, to stop adding crypto in front of every product you build, to stop adding the word blockchain or right. If you think there's a business utility for the blockchain, then you build an app around that. You build an app the same way you used to build an app 5-6 years ago. You don't have to add the word blockchain or crypto to it. As long as in the infrastructure is using this technology to make the app better than its predecessors, this is where we start seeing people adopt it without. So I'm a technologist, and I've been writing code and into technology since I was maybe 13. I can't explain how a CPU works. And I'm pretty sure no one here can explain how a CPU works, yet everyone uses one in their mobile phones, and their laptops, and their smartwatches, right? You don't need to understand how a CPU works. It's not, what you need is someone to build a proper product around this new tech that makes it easy for people to use.
If we don't call it by the acronyms, no one will invest in it, right? So, Udi, we have a few minutes. I just want you to add to this, but then also answer the question. I mean, we're sitting on a panel here today where we're talking about Web3, but should this really be invisible? Should this be the background? Should this be something that people are not focusing on as much as they are right now? Where do you stand on this?
I think first we need to understand that blockchain technology is a very young technology. It's not here for 20, 30, 40 years. It's just 13, 14 years. So the adoption rate is quite high. All throughout, we are at a 5% stage, which is low, but there is so much potential for this in the future. There's going to be a huge adoption for this because of everything that we just discussed. The clients, they want to trade easily. They don't want this whole complication on the onboarding and the stuff. And they want to have transparency, which they don't have today with the brokers. They want to have cheaper commissions, cheaper execution rates, and so on. So all of this will push us to direction for usage of blockchain. But again, this is a young technology. The market is a mature market. People are trading stocks for, 300, 400 years underneath the tree in Wall Street and so on. So we still have a long way to go, but it's there. Everybody sees the future. Everybody understands that the existing financial structure cannot stay the same because of the complexity, because of the over-regulation, because of the bank controlling everything and so on. So we know it's coming. Now, what will be the adoption rate, when this will happen? I hope that it will happen quickly, but nobody can say.
Well, maybe I can add a little bit on this because I'm really looking forward to that day where people can benefit, or our financial trading industry can benefit from this simplification and the transparency from this blockchain. Because just give a very simple example, maybe the brokers can relate, especially the regulated ones. When we apply for a bank account for the regulation, usually in practice it takes more than a year to get a bank account. And some of my clients, once they get the bank account, they deposit the funds in there, but they are not allowed to have the login access. So if they need to pay some money from that bank account, they need to write application, manually authorize a bank to do this transaction. So, and never, we're not even mentioning about the few hundreds of commissions that involved, and it take 5 working days to do the transaction. So imagine once this digital currency has been spread out with proper regulation, and once you've done the KYC once, and you can use it anywhere, in 10 minutes, transaction done. That's a future we're really looking into.
Whenever someone asks me why I work in Web3, I ask, well, have you ever done an international bank transfer? So we are out of time, so I want to just give the audience a chance. If there's anyone with a burning question they would love to get the chance to ask one of our panelists, please feel free and pose your question. I know it's been a lot. It's always a lot on panels like these. So keeping that in mind, that this has been a lot, parting thoughts.
First of all, I would like to say that I'm super happy that I was part of this panel, super happy to meet all of you. Secondly, I think technologies go through iterations of attention. AI has been going through it since the 60s, where it spikes in attention and then drops, and then spikes in attention and then drops. We've got a lot of technologies. I can draw examples on a lot of technologies when it comes to this pattern of, and I think it's important. Well, it doesn't apply to Blu-ray discs, so, but I think it's important because this is how we validate that this technology actually benefits us, but it's also how we evolve that technology to a format that actually benefits us.
Lea?
Yeah, so we're at the new era and we're just at the beginning stage. We should really keep on learning and be aware of our data protection and always stay innovative and creative. Yes.
For me, I think because we are in this room and most of you deal with some kind of financial instrument, this industry is a technology adoption industry. It's always leading the technology. There's always new innovation in this industry. We are always in front of everybody else. And I think this is a great place for adoption of blockchain technology, Web3 or NFT or whatever you want to call it. But this new technology this is the place to adopt it because your client are waiting for that. Your client is fed up trading the same charts, the same instrument, the same stuff. So I think this is the opportunity for small brokers or small companies. They don't have a lot of money to invest in marketing and onboarding of clients and working with affiliates and so on to get a good place in this industry in the future if they will adopt technologies, if they will be innovative and creative and allow their clients new instruments and new things that they are eager for. So it's a good timing for us.
Thank you so much to each and every one of you. I think the insights over the last 40 minutes have just been one after the other. And as for the audience, thank you for your captive attention. Some of it might have been shock and overwhelm, but happy that you stayed anyway. There's a lot to learn here. There's a lot to learn. There's a lot to understand. There's a lot to wrap your head around. And this is really why the value of panels like these are so important, because we need to get the conversation going. So thank you for being part of it, and thank you to all of you.
Thank you for